Today, I want to talk about a company that stands as one of the most recognizable drink staples of the modern age. With its iconic red and infamous fizzle, this company has expanded to every corner of the world. Today, we're talking about Coca-Cola. Hey everybody, and welcome back to Dollars and Cents, helping you make sense of making dollars. Coca-Cola's history is rather interesting. In 1886, John Pemberton sold the very first bottles of Coke at his pharmacy for about 5 cents apiece. Not as a fizzing drink, but as a medicine, with some audacious claims about its effectiveness, and some interesting ingredients. Eventually, in 1888, the Coca-Cola Company was incorporated. After a few rocky years, the company set up its first bottling plant in 1894 in Mississippi. From there, the company grew until about 1919, when a group of investors bought the company for $25 million. This turned out to be pretty poor timing because due to World War I, sugar prices had spiked globally, nearly causing Coca-Cola to shut down for good. Yet during this time, Robert Woodruff had climbed his way to becoming CEO of this empire. Under Woodruff's leadership, Coca-Cola rocketed, transforming into one of the most recognizable brands in the world. In 1955, Woodruff eventually stepped down, and under new leadership, the Coca-Cola Company expanded internationally, engaging in aggressive ad campaigns that permeated the entire world. It developed new flavors, some internationally inspired, but nothing that could beat the classic Coca-Cola flavor. Yet that never stopped the company from expanding and broadening its product array. Recently, Coke invested a large amount of money in Monster Energy in an attempt to diversify its drink offering further, but we'll get into all that a little bit later. Before that, we need to examine Coca-Cola's finances. Already a big red flag is revenue growth. In 2015, Coca-Cola brought in $44.3 billion. In 2020, that number declined all the way down to $33 billion. Definitely not a great start here. Shares outstanding offer a little more hope. In 2015, the company had 4.35 billion shares outstanding, but that had decreased all the way down to 4.3 billion by 2020. Better, if only a 1% reduction in shares. Another positive sign comes in free cash flow growth. Coke went from $7.98 billion in 2015 to $8.67 billion in 2020. Despite the fall in revenue, cash flow is moving up. Good to see. Now we'll compare Coke's last 3 years of EBITDA to its net debt, and Coke has averaged $12.03 billion of EBITDA over the last few years. If we compare this to its net debt, we find it's only 3.5 times greater than that number. This is well below our goal of 4 times, and actually great to see. To get an expected market cap, we'll take the average of the last 5 years of free cash flow and compare it to the company's current market cap. Right now, that average stands at $7 billion. If we multiply this by 20, we get an expected market cap of $140 billion. Unfortunately, this doesn't compare well to Coca-Cola's current $263 billion market cap. It's almost double the amount, so in other words, the company is seemingly pretty overvalued. Moving on, the company's 5-year average return on invested capital is 10.7%, with a 1-year ROIC of 16.3%. Both are well above what we're shooting for. And finally, we come to Coke's dividend, one of the major reasons so many invest in the company. Its dividend yield is 2.76%, with a payout ratio that's pretty high of 71%, and on the flip side, its 5-year growth rate of that dividend is a pretty low 3.7%. So despite falling revenues and an exaggerated valuation, Coke actually has a surprisingly good balance sheet. From growing free cash flow to relatively low debt, we see a rather healthy company. But does any of that mean you should or shouldn't invest in Coca-Cola? To be very clear, Coca-Cola is not a growth stock. People hunting for a tremendous growth story should probably look elsewhere. That said, I imagine dividend-focused and income-seeking investors may want to start looking at this company. Given the size of the company's operation, I believe its growth prospects are fairly restricted. As I said earlier, Coca-Cola already managed to find its way to every corner of the earth. It's basically recognizable to anyone, and that leads to the problem, where does Coke go from here? At least it seems that Coke is solving this question, albeit fairly slowly. From 2011 to today, Coca-Cola has managed to gain 2.2% of the global market share. Now, that may not seem like a lot, but remember who Coke is up against: Keurig, Dr. Pepper, Pepsi, and so many other globally recognized brands. And with that, I believe that most of Coca-Cola's future growth will come from the capital allocation side of the business. Deals like the investment in Monster in 2016 and its recent acquisitions of Body Armor and Costa Coffee have led to the growth of the brand as a whole. In the past, I've talked about the difference between growing organically and growing from acquisitions, and how companies should generally stay away from trying to grow through acquisitions only. Given Coke's unique position, though, the company's growth driven from these acquisitions seems perfectly fine to me. That said, I think it's important to examine what Coke is buying and how it may affect their business. For starters, Coke ramped up its investments in coffee and tea companies. Really, I think this goes back to the trend discussed a while ago in my video on Sprouts Farmers Market. Younger generations are looking to cut out the sugar-intensive foods and drinks of previous generations, focusing on healthier products. Moving into the coffee and tea market seems like a really smart move on Coke's part. Trying to appeal to these younger generations makes sense. Plus, remember, Coca-Cola holds the #1 position in the beverage industry. I believe I can see these trends before they even happen. And really, I think that's what my thesis on this company really boils down to. Coca-Cola is the largest drink company in the world. It's able to acquire and develop brands in-house in order to best suit the larger trends it sees happening around the world. Looking at Coca-Cola reminds me a lot of McDonald's. Both are incredibly massive companies with few growth prospects on a global scale. However, both still manage to optimize their business, generate more free cash flow, and maintain some growth. And really, there's a lot of value in companies like these. Growth just barely stays above the GDP growth of the world, and they can be a steady compounder for years into the future. Yet even monster-sized companies like Coca-Cola have their issues. For example, Coca-Cola's biggest drawdown is that it's so boring, many investors fall asleep and accidentally hit the sell button, losing all of their compounding progress. Okay. That was a joke. A bad one. But seriously, Coca-Cola has underperformed the market over the last 20 years, the last 15, the last 10, and the last 5. Sometimes by up to 100%. Overall, this is by no means a good sign. If we couple this with Coca-Cola's general lack of growth prospects, we see troubled times lie ahead. That's why I think it's so important to really focus on the dividend in this case. Given that the company is generally overvalued, it's not a smart move to buy Coke for the capital appreciation of its stock price. Famously, Coca-Cola just passed its 60th straight year of dividend increases, but this streak could very well be coming to an end. Over the last year, Coca-Cola paid out close to $9 billion in dividends. Remember, in financials, we mentioned that the company has averaged $7 billion in free cash flow. In 2021, Coca-Cola had an incredible year, posting a free cash flow of $11.7 billion. This puts the payout ratio at 71%, and on the surface, it seems like this is reasonable and not a problem, but only if the company can continue on its current trajectory. However, 2021 was quite a unique year. Another interesting thing Coke managed to do was post a 108% free cash flow conversion rate. This is the rate at which a company can convert profits to cash flow. Coca-Cola estimates that the rate will fall to 90 to 95% over the next few years, and this poses a big problem. Coke has to continue maintaining the excessive amounts of free cash flow generated in 2021 to continue paying its dividend, and while the recent acquisition of Body Armor may help with this, I'd still have my doubts. It's for this reason why Coke has only raised its dividend by 1 cent for each of the last few quarters. Yes, the company maintained the growth, but it's so small because of the massive fluctuations in free cash flow, and with each passing quarter, Coca-Cola is looking less like a dividend king and more like a dividend trap. To top it all off, Coke is embroiled in a legal battle with the IRS. The IRS claims that Coke broke the law by underpaying taxes. Coke is countersuing, stating that the IRS charged the company too much. In this battle looms the fate of $12 billion, a past due tax bill, and a 3.5% tax increase for this carbonated colossus. With this menu of problems, I'm led to believe that the only significant reason to invest in Coca-Cola is for its dividend, yet even that probably won't even last the next 2 years. Maybe the company slides out of this war with the IRS scot-free, maybe it continues to generate enough free cash flow, but really I have serious doubts that it will. And so that leaves us with a question: am I buying Coca-Cola? The answer is no, even though I'm a former shareholder. For me, it's the lack of definitive future growth prospects and the dangerous spot the dividend is in. The unfortunate combination of stock prices not rising with the dividend, which doesn't provide the void of value left in the stock price's place, is just too uncertain for me to go back to investing in the beverage maker. But of course, I could be flat out wrong. For the millions of shareholders out there, I hope I am. Still, I won't be rejoining their ranks anytime soon. That said, that's all I've got for you in this video. Leave your thoughts on this Baron of Beverages in the comments section below, or hop on my Discord where we can talk more. Until next time, I'll see all of you in the next episode of Dollars and Cents.